And welcome back to the Dukascopy studios here in Geneva. Joining me today is Robin Milway from the new Capital Dynamic European Equity Fund. So Robin, welcome to the studios.
Thank you for having me.
So tell me, when looking at a core European equity fund, what are the important fundamentals?
Well, the way we think about core is that there's a couple of things that you need, and firstly it has to be diversified. So the way that we structure the portfolio is pan-European, so we include the UK within that holding, and of course Switzerland, Scandinavia. So you have a very broad diversification from a geographic perspective. We also diversify from a sector perspective as well, so we ensure that we hold stocks in every single of the 10 that we define them sectors. So from a sector perspective as well, we also ensure that we hold companies from each of the 10 sectors to give that not only geographic but sectoral diversification. Secondly, the fund is good old-fashioned stock picking, so that means that we're not style or macro cyclical dependent, which means that we aim to perform in up markets as well as down markets.
So when looking at UK stocks, they take up 30% of the benchmark in new capital. So how are these stocks valued?
Well, from a valuation perspective, at this point in time, given what the markets have been up to recently, the UK is probably valued pretty much as on an index basis, so the entire market, pretty much the same as what you would see across Europe. Now, however, when you drill down into the individual stocks and particularly sectors within that, you see quite a bit of diversification away from what is in Europe. So, for example, the UK holds a lot more energy stocks than you would do, which we feel is probably a lot of them are a little bit too expensive at this point in time. Also, when you take into account banks, for example, with financials in the UK, banks look particularly cheap, such as Lloyd's, for example, that's on a price to earnings multiple of 9 at this point in time, which we think is quite cheap. Compare that across Europe, and we feel they're a little bit more expensive. They're returning to growth from a momentum perspective. So the valuations diverge under the hood as such, but in aggregate, they're probably quite similar.
Fantastic. And 2015 has been an extremely volatile year. There's been the UK elections, the Greece crisis and European troubles. So how has this affected stock markets and business confidence?
Well, the market has been an incredible round trip this year, up and down 20% since its peak around about May. Now, there's been a lot of things happening this year. So obviously, as you mentioned, the UK election, where the UK markets, there was a bit of a drip feed of investors leaving, we think, before the result, and then everyone stampeded to get back into the market once the Conservatives gained power. In terms of Greece, there's been a lot of sentiment that you would imagine would hurt the markets this year, but that hasn't really been the case. And certainly from an economic perspective, we didn't feel that Greece was in any way particularly important, given it's roughly 1.5% of European GDP. What probably is important to Europe is China. And China certainly is going from a higher rate of growth to a lower rate of growth. So the rebalancing there certainly has hurt sentiment in terms of Europe and therefore the markets. However, the exports from Europe to China is roughly about 2% of GDP. So we don't necessarily see that will hurt significantly, although at the margin that's probably what will be the biggest driver, I think, in terms of the European markets this year.
Sure. And Robin, how would one assess their sustainability in their companies?
In terms of companies, we think about pricing power ultimately is what drives the sustainability of a company. So, of course, you need volumes, and of course, you need customers to buy your product. But that's not enough in terms of our analysis. So we think about pricing power. Ultimately, can the company charge the same or more for the products or the evolved products in, say, 5 years' time is roughly 3 to 5 years' time is roughly that time horizon. So therefore that involves the competitive dynamics within against the peer group. It involves the actual company's ability to innovate and grow internally as well. And ultimately, you want the company to be around in 3 to 5 years and have the same pricing power that it enjoys today.
Absolutely. Well, Robin, thank you so much for coming in today and sharing your expertise with us. It was a pleasure to have you back.
Thanks very much. Thanks for having me.
And thank you for watching. For all the latest Dukascopy updates and interviews, do keep clicking back. Goodbye for now.